Hey everyone, so just coming off the rocky week in the market, especially if you were tech heavy like I was, it was pretty brutal. But I wanted to take some time this weekend just to review what happened and share some of my thoughts around what's going on, and also maybe talk through some of my reasoning on why I'm positioned the way I am. So the first point is, if you're following the news media, if you've paid attention to anything that any financial piece of information that's out there, there's a lot of talk around the yield on 10-year. So this is a chart that shows what's happening, and I like this because it shows what's happened over the last year. Now, if you remember, this was around the time that the markets really had started to go down last year because of the whole coronavirus scare, and this sets puts that into context. So, some point similar point last year, you can see that the yield was pretty high. And if you can see this chart, we are generally seeing like an uptrend in the yield, uh, going back to like September, October of last year. So um, sort of gives us like a good framework to work with on what's going on in the yield. Now, this is happening in spite of the federal rate being at pretty much an all-time low. So, there's but in spite of that, that's actually driving up a lot of like demand for money, which is in turn pushing up the yield. This is in turn impacting our bond prices. So as yield increases, bond prices would reduce. So if you look at a TLT chart, or any other like bond chart, you will see like bond prices have been dipping, and bond has been in a bear market for this year. So bond prices have been down by over 20%. So a lot of action going on in the yield and the bonds, which is in turn impacting the stock. So how does this play out in the stock market? So, a couple of my favorite ETFs over the last few years have been ARKK, which is the ARK Innovation ETF, and QQQ, which is the NASDAQ ETF, the NASDAQ Modified 100. And these are growth ETFs, so their P is fairly on the higher side, and this is in exchange for the potential revenue streams and potential profit in the future. So we are trading some of those near-term gains for long-term view. And here's a quick comparison of what's happened along with like the yield. So this is again going back to the previous chart. We overlaid QQQ and ARKK over yield prices, and you can see that the lower yields are a very good environment for specifically growth stocks to be very good performers. And ARKK happens to be that basket of very high growth stocks. So this is Tesla, this is Teladoc, this is CRISPR Therapeutics. So all very, all like a little bit on the speculative side, but extreme growth names. QQQ generally is not as much as ARKK, but still very heavily focused on growth. And last year, this was awesome because generally the environment that we were operating in was a low rate environment with not a lot of like risk associated that the market is pricing in today. So, quick comparison, like you can see that our ARKK was absolutely soaring before this fear within the market set in that happened around February 12th, where it hit like one of its all time highs. And then as the rates started to really grow at a very quick rate, we are seeing a direct impact in money coming out of these high growth stocks. Obviously, ARKK has been very negatively impacted. We are also seeing some level of impact in QQQ. You can see that little dip post Feb 12th where the prices just kept going down. So those are certain correlations or trends to notice. So obviously, one of the things that I will be looking for is when the yield starts to fall or when the bond prices start to move up. So this would be a pretty good sign that the market might be returning to normal, or at least some of this heavy selling in the market would stop. Remember, growth is pretty much at this point inversely correlated with yield prices. So that's how this is shaping up. Personally, my thought is the yields will stabilize, and the yields will we will start to see a little bit of a decline in the yields. Could be as early as next week. ARK, especially ARK, ARKK stocks are not really meant to be like a super short term, or it's not a very good idea to be speculating on a weekly basis on these names. So generally, I feel like if you're building your position up as the stock prices are going down, this probably presents a very attractive entry point. At least I have been taking advantage of some of these falling prices and slowly building up ARKK positions via directly buying shares. Same with QQQ. I have positions in both QQQ, and I also have bullish positions by via some puts on SQQQ, which is the triple leveraged version of QQQ. But my puts are long term, long dated, and I'm fairly confident that once yield stabilizes, we will see at least the decline get arrested, the markets starting to maintain some stability and generally trending up. So I'm okay with those puts. But next week, if there is a big dip in the market, I would consider adding some long dated SQQQ puts going into next week. Um, and then the other speculative name that we've seen a lot of action in has obviously been Bitcoin, which was again a huge beneficiary of the low interest rate environment. So here's a quick look at Bitcoin versus the 10-year yield, and you can see that Bitcoin absolutely loved the low yield. And this is because low yield directly translates to people are really not getting a return for their money. So typically, if you go back to last year, I believe the 10-year was paying about 0.5 or 0.6%, which is nothing. And today it's about 1.55%, which is better than where it was last year, but it's pretty low, and Bitcoin absolutely loves the lower yield. The short-term dip in Bitcoin, again, if we go back to the same second to third week time frame, we can see that dip starting to happen in Bitcoin. Again, directly related to the rising yield. It sort of sucked the air out of Bitcoin a little bit, but again, it's done pretty well over the last year or so. Personally, I'm still not sure where Bitcoin is going. I have some exposure to Bitcoin, both directly owning some amount of Bitcoin, and also I do have some calls in BLOK, which is what I consider as a part of my trading portfolio. I personally love using BLOK as an exposure for Bitcoin or proxy for Bitcoin because it will have an outsized return if Bitcoin continues its trend up, and it has some of those names that I would have owned anyways to get this exposure to Bitcoin. But as hopefully as yields start to stabilize and taper down, I do think we will see a spike in the Bitcoin pricing. I'm really not sure what the higher limit is, but I wouldn't be surprised if it doubles from this point by end of this year. But we'll see. Obviously, all this comes with a caveat that manage your risks, only bet what you can lose, and obviously, past performance is never an indicator of future performance. Correlations can also change, so I will be focusing on some of these correlations. Um, in this video, I've not covered correlation with gold prices, but that's another thing I would be looking at pretty closely tomorrow before the market opens, just to see what's going on and come up with a plan on how I want to trade the market going into the week. So that's what I wanted to hit on. I know there's been a lot of news with the stimulus getting passed. So that should definitely help the market a little bit. We should see, in my opinion, the yield starting to fall. Again, time will tell where market is headed. But fingers crossed, and good luck to everybody as you plan your trades for next week. See you in the next video.